Breaking news. Nigeria's currency is on a rebound, but what does this mean for the economy? In the world of finance, currency fluctuations are a daily occurrence. Yet when a nation like Nigeria sees its currency rebound, it's something to take note of. Nigeria, known for its rich cultural heritage and vast natural resources, has had its fair share of economic ups and downs. The recent rebound of its currency, the naira, has caught the attention of economic pundits around the globe. So, let's be awakened and dive into the current situation. The naira, which has been under considerable pressure in recent years, is showing signs of recovery. This isn't a small feat for an economy that has grappled with various challenges, including inflation, declining oil prices, and structural deficiencies. The rebound signifies a positive turn, a glimmer of hope amidst the economic turmoil. The significance of this event cannot be overstated. A stronger naira could mean several things. For starters, it could lead to a reduction in the cost of imports, making goods and services more affordable for Nigerians. It could also boost investor confidence, instigating a surge in foreign investments. But the impacts of this rebound are not confined to the Nigerian borders. In the global economy, every ripple creates waves. As one of Africa's largest economies, a stronger Nigerian currency could potentially influence regional trade dynamics, positioning Nigeria as an even more significant player on the international stage. However, as with any economic event, there are complexities to consider. The rebound of the naira is a multifaceted issue, with implications that can be both beneficial and challenging. It's crucial to understand these nuances to fully grasp the potential impacts on the economy. So, what's next for Nigeria? This is a question on the minds of many. As we move forward, we'll delve deeper into the factors that led to this rebound, the potential repercussions on the economy, and the possible global implications. Stay tuned as we delve deeper into this economic turnabout. Currency fluctuations aren't uncommon, but what drives them, you may ask? Well, it's a complex dance of various factors, so let's try to untangle this web. At its core, currency value is influenced by supply and demand dynamics in the foreign exchange market. When more people want a particular currency, its value goes up. And when people want less of it, its value goes down. Simple enough, right? But what influences this demand? Enter economic indicators, from inflation and interest rates to political stability and economic performance. When a country's economy is strong, with low inflation and high interest rates, its currency tends to be strong. Conversely, when a country's economy is struggling, its currency often weakens. Investors play a crucial role here. They're always on the lookout for economies that offer the best return on investment. So, when an economy starts to perform well, investors flock to buy its currency, driving up its value. But it's not just about the numbers. Geopolitical events, natural disasters, and even market speculation can send currency values swinging. Why does all this matter? Well, currency fluctuations can impact everything from the price of your morning coffee to the health of global economies. They can affect import and export prices, inflation, and even the cost of your next vacation. So, as you can see, currency fluctuations are a vital cog in the machinery of global economics. They're like the heartbeat of the global economy, with each rise and fall echoing across markets worldwide. With this background, let's examine Nigeria's situation. Nigeria's currency didn't just wake up one day and decide to crash. What led to the downturn? Let's take a step back and look at the bigger picture. The story of Nigeria's currency crisis is a tale of a series of interconnected events and decisions, a domino effect that started with economic policies. In an attempt to diversify the economy and reduce dependence on oil exports, the government implemented stringent policies that, sadly, didn't pan out as expected. The result was a dent in the economic growth, making the naira vulnerable. Next, let's talk about oil, the lifeblood of Nigeria's economy. The country is the largest oil producer in Africa, with crude oil accounting for over 90% of its export earnings. When oil prices plummeted globally, the revenues dried up, leaving the economy gasping for breath. The devaluation of the naira followed closely, as the country struggled to balance its books. Then there's the international relations angle. Nigeria's relations with its trading partners, especially China, have had significant impacts on its economy. As a country heavily reliant on imports, any strain in these relationships can have disastrous effects on the currency value. All these factors combine to create the perfect storm, leading to the devaluation of Nigeria's currency. The naira found itself in a free fall, spiraling into a crisis that left the nation and the world worried. This sets the stage for the recent rebound, but what sparked the upswing? Don't worry, we'll delve into that in the next scene, stay tuned. A phoenix rising from the ashes. That's what Nigeria's currency rebound resembles. But what fueled this resurgence? Let's delve into the factors that sparked this economic revival. Firstly, the shift in economic policies played a crucial role. The Nigerian government took bold steps to stabilize the economy, focusing on diversification and reducing reliance on oil revenues. They implemented reforms aimed at boosting local industries and promoting entrepreneurship. This not only strengthened the domestic economy, but also bolstered international confidence in Nigeria's economic prospects. Secondly, Nigeria's international relations came into play. The country forged strategic alliances and trade partnerships with global powers, attracting foreign investments. The infusion of foreign capital played a significant role in stabilizing the currency, contributing to its rebound. Another key factor was the change in market dynamics. The global oil market witnessed a recovery, leading to an increase in Nigeria's oil revenues. As a major oil exporter, the fortunes of Nigeria's economy are intrinsically linked with the global oil market. The rise in oil prices gave a much-needed boost to Nigeria's economy, aiding the currency's rebound. Lastly, the Central Bank of Nigeria's interventions cannot be overlooked. The bank implemented a series of monetary policies to curb inflation and stabilize the currency. Their efforts in managing liquidity in the foreign exchange market were instrumental in restoring confidence in the Nigerian currency. The rebound didn't happen in a vacuum. It's had some significant impacts. A rising currency can be a double-edged sword. What does this mean for Nigeria's economy? Well, let's delve into that. When a nation's currency strengthens, it can have a variety of effects on the economy. For one, it can combat inflation. When the value of the naira increases, the price of imported goods tends to decrease. This can lead to lower inflation rates as the cost of goods and services falls. For a country like Nigeria, where inflation has been a persistent issue, this could provide much-needed relief. However, there's another side to this coin. A stronger currency can also make a country's exports more expensive on the global market. For Nigeria, a major exporter of oil, this could potentially lead to a decrease in demand for their exports as they become less cost competitive. This could impact trade balances and ultimately, the overall economy. But there's more. A stronger currency can also influence investment. It can attract foreign investors who see potential for higher returns. As the naira strengthens, foreign investments become more valuable in their home currency. This can lead to an inflow of foreign capital into the country, potentially stimulating economic growth. Yet it's not all sunshine and roses. Higher levels of foreign investment can sometimes lead to economic instability. If investors decide to pull out their money quickly, it can create a financial crisis. So, while the strengthening of the naira can attract investment, it's essential to manage these flows to prevent potential economic instability. In conclusion, the rebound of Nigeria's currency is a complex issue with far-reaching implications. It can combat inflation, impact trade, and influence investment both positively and negatively. It's a delicate balancing act, managing these various aspects to ensure stable and sustainable economic growth. But it's not just the economy that's affected, the ripple effects are felt far and wide. In a globalized world, a currency rebound in Nigeria isn't just Nigeria's business. So who else is affected? To understand this, let's explore the interconnected strands of the global economy. Firstly, let's look at international trade. Nigeria, with its rich oil reserves, is one of the top oil exporters in the world. When its currency strengthens, the price of its oil exports become more expensive for countries buying in other currencies. This could lead countries to look for alternative, cheaper sources of oil, impacting the global oil market. Secondly, we have foreign investment. Nigeria, like many emerging economies, relies on foreign investment for economic growth. A stronger currency means higher returns for foreign investors when they convert their profits back into their own currency. This could potentially attract more foreign investment into Nigeria, boosting its economy while also impacting global investment flows. Now let's consider global economic trends. Nigeria's currency rebound could be seen as a sign of economic stability and growth in Africa's largest economy. This could boost investor confidence in other emerging markets, leading to a ripple effect across the global economy. And let's not forget about the potential implications for global financial institutions. Banks and companies with investments or operations in Nigeria could see changes in their financial performance due to the stronger Nigerian currency. This could have knock-on effects on stock markets and financial systems around the world. In sum, the effects of Nigeria's currency rebound extend far beyond its own borders, influencing international trade, foreign investment, global economic trends, and the performance of global financial institutions. So, what's next for Nigeria and its resurgent currency? No one can predict the future with certainty, but what can we expect from Nigeria's economy given the current trend? As we delve into the realm of projections and predictions, it's essential to remember that these are based on current trends and indicators and are subject to change. However, they provide valuable insights into possible future scenarios. Economic experts and analysts suggest that if the factors that led to the rebound of Nigeria's currency remain consistent, we might see a sustained improvement in the economy. This could mean more stability for the Nigerian naira, increased foreign investments, and stronger international trade ties. But it's not just about the currency. A stable economy could also stimulate growth in various sectors. We could see a rise in entrepreneurship, advancements in technology, and improvements in infrastructure. This could potentially lead to job creation and a higher standard of living for the Nigerian people. However, it's also crucial to consider the global economic landscape. External factors such as fluctuations in oil prices, global trade policies, and international relations can significantly impact Nigeria's economic trajectory. Moreover, while the rebound is a positive sign, Nigeria's economy still faces significant challenges. Economic diversification is a crucial area that needs attention. Currently, the economy heavily relies on oil, and diversifying into other sectors such as agriculture, manufacturing, and services can provide a buffer against future shocks. On the flip side, if the current economic policies do not continue, or if there are adverse changes in the global market, Nigeria could potentially face another downturn. This could lead to currency depreciation, inflation, and a decline in the standard of living. These are just predictions, and the actual path Nigeria's economy takes could be very different. It's a complex interplay of numerous factors, both internal and external. Only time will tell how this economic story unfolds. But one thing's for sure, it's a story worth watching.